All right. Yes, thank you very much, and very warm welcome from my side as well. My name is Andre Dragosch. I'm head of research at Deutsche Digital Assets, formerly Iconic Funds. We're a crypto asset management company. We're the second to present at this investors conference after cryptology. So if you stood around at noontime, you've probably seen the presentation by Patrick Lowry. But before I jump into what we do at our company, I want to give you a short introduction about myself. So I've just recently joined Deutsche Digital Assets just slightly more than 2 months ago in October, but we've done some great research projects already, one of which I will show you in a minute. But before joining Deutsche Digital Assets, I've been working for more than 10 years in portfolio management and investment research. And yes, so what we do at Deutsche Digital Assets, basically, we're a crypto asset management company, and we have basically 3 pillars of services, of products that we provide to our clients. The first products are ETPs, exchange traded products based on single asset cryptos such as Bitcoin. So we have a Bitcoin ETP with an Ethereum ETP, an EOS ETP, as well as ApeCoin ETP. Then the second pillar of our product line is basically professional investor funds, Maltese funds that focus on the top 20 crypto assets, and also with a momentum strategy tilt. And last but not least, we've recently onboarded a team of quantitative trading strategies, trading experts from France. They've done pretty well this year as well, and they focus on active strategies, crypto long short strategies, alpha strategies basically, and smart beta strategies. And this is basically our product line, and we do also white labeling of ETPs as well. So now comes the fun part. So I'll present you our latest research at Deutsche Digital Assets. So can macro factors explain the price of Bitcoin? So the short answer is yes. So we've done some research on this, and we found out, and I will show you the details of the analysis as well as the methodology in a minute. So we found out that 83% of Bitcoin price variations can be explained by 4 macro factors, which is global growth, monetary policy, changes in US dollar and Eurozone risk expectations. We also found out that global growth is the single most important macro factor for Bitcoin when considering the whole sample. And last but not least, we've also found out that in particular this year, so in 2022, monetary policy has indeed been the most dominant macro factor for Bitcoin. So Bitcoin is a macro asset, but let's dive into the details. So how did we proceed in this analysis? How did we go about? So we've basically done 3 steps. First, we've selected 30 financial market variables from all kinds of asset classes, basically from equities, bonds, derivatives, commodities, and FX. Financial market prices, basically things like cyclicals versus defensive stock performance, or financial versus staples, or the equity risk premium. So we've looked at bonds, we've looked at treasuries, the VIX, the skew, and all kinds of financial market prices. Then we reduced these 30 financial market variables to just 4 macro factors, which are global growth, monetary policy, US dollar, and Eurozone risk, basically the risk of a Eurozone breakup. And these 4 macro factors, they explain the majority of financial market prices as we can see them. And in the third step, we've regressed these 4 macro factors on the price of Bitcoin on a rolling basis in order to determine the sensitivities, the betas of these macro factors to Bitcoin and their explanatory power over time. So starting with the first step, so we just selected a bunch of financial market variables, as I explained before, but the most interesting step is step 2. Basically, how did we reduce these financial market variables? The financial market as a whole, they represent basically the financial market as a whole. How did we reduce these to only 4 macro factors? We used a statistical approach called principal component analysis. In German, it's called Hauptkomponentenanalyse. And so we've reduced 30 variables to 4. So we basically reduced the complexity of financial markets. So financial markets are complex in general, but we've reduced these 30 variables to 4. And we can still explain the majority of variation that we see in financial markets. So how did we go about this? So before I start diving into the details, one major advantage of these principal component analysis is basically you have uncorrelated orthogonal factors that are independent of each other, which is a major advantage of this approach. So you actually pick different aspects of financial markets with these 4 types of factors. A major drawback of this analysis or this approach is basically when you extract these factors, they don't have a name. You don't really know what they are initially. So you basically need to interpret them. And the interpretation part is basically done in an intermediate step where you look at these macro factors and then you compare them to financial market variables. You can see on the left-hand side, the first factor, the global growth pricing, as we call them, shows much explanatory power, much correlation to cyclical financial market prices, such as the relative performance of high yield bonds versus investment grade, or US 30-year yields or US 10-year yields, cyclicals versus defensive performance, which is usually a very good high frequency indicator of global growth. So we call this global growth, but you can basically also call it global risk appetite. They correlate very much. So the second factor that we've extracted, we call monetary policy pricing, because it correlates so much with rate-sensitive assets like US investment grade bonds, emerging markets bonds, Euro investment grade bonds, 10-year yield, 30-year yield, and so on. These are the other 2 factors. The US dollar pricing correlates very much with gold and with the DXY, the dollar index. And on the right-hand side, you can see the correlation of the Eurozone. Euro breakup risk factor correlates very much to the Italian 5-year sovereign spread. So we call this Eurozone risk. And here you can also see how they correlate to other common variables. For instance, on the upper right-hand side, you can see the global growth pricing that we've extracted from these 30 financial market variables, which is the first macro factor, and the ISM, your export orders, which is a sub-index of the purchase manager index, purchase manager survey of ISM. So you can see there's much covariation, lots of correlation with this survey, but at the same time, you can see that these macro factors even lead these surveys, right? So changes happen before any changes in the surveys itself. And on the left-hand side below, you can see the monetary policy macro factor, which correlates very much with US real yields, which are usually also regarded as a variable for monetary policy. So this is the third and fourth macro factor as well. On the left-hand side above, you can see the US dollar pricing macro factors versus the DXY, as well as on the right-hand side below, you can see the Eurozone risk pricing macro factors versus the 5-year Italian sovereign spread, which is usually a variable for risk aversion in the European bond market. So these are the 4 macro factors that explain most of the variations in financial markets. We can explain north of 4/5 of all variations that we can see. And what we've done in a third step is basically take these 4 macro factors and regress them on the price of Bitcoin. And this is how it looks like. So on the left-hand side, you can see the betas, the sensitivities of these factors, for instance, global growth, monetary policy, dollar and Eurozone risk to Bitcoin on a rolling basis. We've chosen a 6 months rolling window. And as you can see, sensitivities can be both positive and negative, meaning the factor goes up and Bitcoin goes up as well. There's a positive sensitivity, positive beta, and there are even periods where sensitivities are negative, meaning the factor goes up, Bitcoin goes down, and vice versa. But the more interesting part is probably on the right-hand side, which shows the rolling partial R squared of these macro factors to Bitcoin. Rolling partial R squared means, so R squared is basically the amount of variance explained by these factors, how much of the variation that we can see in the price of Bitcoin can be explained by this or that macro factor. And partial means, so we got rid of all the interactions between these macro factors, so that we're just measuring the pure effect, the macro factors on a rolling basis, also 6 months as well, 6 months rolling time window. And what you can see is the yellowish area, which represents the R squared of global growth in the past 6 months, is very dominant. And we can say over the whole sample from 2015 to today, global growth was the most dominant factor for Bitcoin. And as you can see, other factors, they change over time. Their dominance changes over time. So factors, the lead or the dominance of factors changes over time, and which factors important can change from day to day, basically. But what you can also see is there's sometimes even phases that we cannot explain with these macro factors, which is represented by this dark gray area, which is the residual. This is basically the amount of variation that we cannot explain. A very good example, prominent example, is when Tesla made a U-turn on their Bitcoin acceptance in 2021, so last year. They made a U-turn, they didn't accept Bitcoins for Tesla purchases anymore. And so we saw a dump, a price decrease in May 2021 onwards, which couldn't be explained by any of these macro factors, was just a pure coin specific, let's say, idiosyncratic factor that actually led to this decline in price. But more recently, what is very interesting, I would like to highlight this, is that monetary policy, so the very dark area, has been picking up. So the amount of variation that changes in monetary policy as priced in financial markets has been the dominant macro factor for much of 2022. So, but this is basically our key takeaways from this analysis that I've also mentioned at the beginning. So first is we can explain most of Bitcoin's price variations with these 4 macro factors, namely global growth, monetary policy, US dollar, and Eurozone risks. And to be precise, 83% of Bitcoin price variations that we can explain between 2015 and 2022. So Bitcoin is a macro asset. The second point is global growth appears to be really the most dominant factor with respect to Bitcoin over the whole sample. But more recently, and that's the third point, in 2022, so this year, monetary policy and especially tightening monetary policy has indeed been the most dominant macro factor for Bitcoin this year. So, and with that being said, I would like to conclude the presentation, but before doing so, you can read our latest research reports on our website. So they're free of charge. You can download them. We also have a newsletter that we send every week to hundreds of investors covering the most important charts and themes in Bitcoin crypto assets. So feel free to subscribe as well. And I would highly appreciate if you did so. Yeah, it's also free of charge, but in the meantime, yeah, I'd like to open up for questions, and thank you very much for your attention for the time being.
Yes, thank you very much. There's quite a lot of time left, and so far, not so many questions, to be exact, just one. It's regarding the model. How do you see the events of Bitcoin that the Bitcoin price is influenced by the halving? How is that represented in the model?
So it's not part of the model at all. And if these halving, which are coin-specific factors, they're not macro factors, right? They're basically idiosyncratic factors. For instance, the last halving was in May 2020. So if you see an increase in the price of Bitcoin that is not consistent with other increases or decreases in the micro factors, then we could see this in our residual factor picking up, and we could at least identify these periods and say, look, macro factors didn't play much of a role here, but other coin-specific factors or external factors that we didn't capture with the model were more important. So the model basically focuses on macro factors. So it's often basically an area that most of the crypto investors disregard or don't pay much attention to, but at least according to our analysis, it's very dominant. But of course, there are phases such as in 2021, where macro factors didn't play much of a role, but at least we can identify these periods as well.
Okay. And now there's a few questions that are coming in. So what is the plan of DDA regarding an IPO or strategic partnership with a large asset manager?
I can't say very much about this, but of course, we're having continuous discussions with some of the players. I cannot disclose which ones, of course, but we do have an interest in strategic partnerships, of course, and white labeling, especially in the fields of white labeling as well, where we could issue ETP products in cooperation with any strategic partner as well. So discussions are ongoing, but of course we cannot disclose them.
Yeah, of course. And you're now going to roadshows and conferences and other institutional events. How is your response? Well, how is the response to your products in general?
So it depends pretty much on the market environment that we're currently in. We have to admit the bear market is taking its toll on the demand for crypto asset products, although the environment couldn't be better at the moment. So we see valuations are very much at the bottom. So they're indicative, at least of a cycle bottom, at least comparable to previous bottoms. We've seen a very pessimistic sentiment in the aftermath of FTX. And we are currently seeing, when we are looking at our macro factors, that the monetary policy factor is becoming less restrictive. So the market's already pricing a turnaround in Fed monetary policy and tightening in monetary policy, which we think should be a tailwind for crypto assets going forward. But of course, as the prices are still very depressed in crypto assets in general and Bitcoin in particular, the institutional demand is rather shallow at the moment. But my saying is always, sentiment changes with price. As soon as we see a significant pickup in price, sentiment will change. And this is just the behavior of markets and market players. They are usually pro-cyclical rather than counter-cyclical. But from our research and investment point of view, we think it's rather an attractive environment to increase exposure now.
And you mentioned the ETPs. How are your products are compared or different to the ones from the competition?
So we have one of the most competitive products in terms of pricing. At least our Bitcoin ETP is very competitive in terms of management fees. We have below 100 bips of management fees, and which is comparable to the lower end of pricing. So we do offer the relatively cheap ETP solutions, but at the same time we work together with prime custodians such as Coinbase Deutschland that have a very high standard of security. So we offer secure, but at the same time cheap and competitive priced products.
And the ETP for Bitcoin, is that basically helping institutional investors who can't directly invest into Bitcoin, or why is there a middleman?
Yes, investing in Bitcoin is still cumbersome for most of the institutional investors. So there's custody, the issue of custody, so key management, private key management that is involved with that, securing the coins, securing the private keys that are necessary to transact the coins, rebalancings and these sort of issues, and liquidity as well. Therefore, many institutional investors, they actually resort to ETPs that are highly liquid, that are that can be implemented into multi-asset funds very easily, and therefore we see that this is basically the prime avenue for institutional investors to invest into crypto assets.
Mm-hmm. And looking to the US, there's a study that only 1 out of 5 family offices is currently invested in cryptocurrencies. What do you think needs to change that to increase that? I mean, that's just another asset class that can be invested in. So what needs to change, and do you think it will change?
Yes, definitely. Especially in Germany, we've seen a regulator that's been very supportive of crypto assets. I mean, you can invest up to 20% of your AUMs in Spezialfonds, right? In special fund vehicles in Germany. I think the regulators in Germany, they positively surprised us as well in this regard. So I think regulation has become very clear, so that I think that shouldn't be an issue. The fact that there's only 1 in 5 family offices that has already invested just shows that this technological adoption and this investment theme, this alternative asset, is still pretty much at the very early stages. But we think there's significant upside, as we think that first, every asset is going to be tokenized, be it real estate, be it bucks of gold, or any kind of other assets. So blockchain technology will play a pivotal role, and crypto assets such as Ethereum are at the core of this development. At the same time, we think that Bitcoin as a savings and payments technology will pick up steam, and the technological adoption will just accelerate within this high inflation regime as well. And therefore, we think, although on the one hand the percentage of investors is still very low, we rather think it's a sign that we're still very early stage and there's still lots of upside.
Mm-hmm. And the model that you presented, I mean, you just joined recently, I think, DDA. Did you develop it, or was it developed by DDA and you work on it, or you present it and improve it?
So I've developed it myself at DDA as well. And yeah.
And how did DDA work before you introduced that model?
So they used different kinds of models, but not these particular macro models.
Okay. And in the US, a lot of new crypto products and ETFs and ETPs were created in the last couple of months. Do you see the same growth in Europe, or is it different to the US?
I think it's somewhat different, although we see some fund flows. Even during the week that FTX collapsed, we saw net fund inflows. So there's significant increase for institutional products like ETPs, and we've also seen some increase in hedge fund buying. In fact, we've seen the highest beta of global hedge fund indices to Bitcoin in November. And so we think there's lots of institutional inflows coming in. And at the same time, in the fallout of FTX, in the aftermath of FTX, we saw some fund managers, such as Bitpanda, they closed their fund. I mean, it was a very small fund, but at the same time, we see some consolidation within the industry. But it puts us at Deutsche Digital Assets at DDA in a better position than before, because we haven't been so much affected by the FTX collapse, and therefore we will use this consolidation to increase our market share as well.
Mm-hmm. And can you give us an overview what kind of ETPs are currently offered by DDA? Is there a list in the presentation maybe, or?
There's no list in the presentation, but we do offer single asset crypto ETPs, in particular Bitcoin, Ethereum, which already make up 60% of the crypto asset market capitalization. Plus, we do offer an EOS-based crypto ETP as well as an ApeCoin ETP.
Okay.
But we have more projects in the pipeline concerning ETPs as well.
And are they physically backed, or how do they work?
Yes, they're physically backed, as you say, but yeah, it's the private keys that are necessary for transacting the coins are basically in custody, in our case, at Coinbase Deutschland.
Okay. So we have 20 seconds left. I think that's not enough time for another question. Thank you very much for this interesting topic and great presentation.
Thank you very much. And yeah, in case there are any other questions, you can always reach us at research@deutsche-digitalassets.com. And yeah, would be very good to stay in touch.